Welcome back. We're still looking at Nigeria, but this time we're looking at the other side of Nigeria, the economy. Biggest economy in Africa, according to CNN Money, the third fastest growing economy in 2015. Some will say, as large as this economy is, how much of impact has it had on its citizens? I want to look at the economy today vis-a-vis the falling oil prices, the diversification of the economy, focus on agriculture, automobile policy, politicking. Someone will shoot me for saying that. Okay, so let's look at the Nigerian economy. Nigeria has witnessed significant and indeed some will say laudable economic progression from our amalgamation till date. Problem is not money, but how to spend it. That was credited to the former head of state, General Yakubu Gowon, between 1967 and 1975. Nigeria's problem hasn't really been the amount of resources it has, but how it has been managed. Well, to look at this, two gentlemen. Tilowa Adebajo is an economist. Thank you for coming to the show.
Thank you. Good morning.
Dr. Boniface Chizia is a financial consultant. Thank you for coming to the show.
Thank you for having me on your program.
Now, the economic outlook for Africa's largest economy appears to be gloomy, occasioned by recent free fall in oil prices, with Boko Haram insurgency to the northeast, electricity, power challenges around the country, the Ebola virus, which had its impact, and thank God it's out of the way, and the inactivity...
Still threatening.
Okay, still threatening. Inactivity and uncertainty is usually associated with the impending general elections. There are genuine reasons for apprehension and all of that. Government policies, inconsistency in government policies. What's your assessment of Nigeria's economy in the 21st century?
Well, I think the numbers are very clear. I think, and I think we shouldn't belittle the numbers. Nigeria is the powerhouse of the African continent. It's the largest economy on the continent. Probably top 3 fastest growing economy in the world. We've achieved significant gains in foreign direct investments. Between 2011 and 2013, we saw a surge of portfolio investments into our capital markets from about 2.5 billion in 2011 to about $20 billion in 2013, which show that Nigeria is now integrated fully with the global economy. There are pros and there are cons. So in a lot of the numbers and the headline numbers, I think we've ticked the boxes. The challenge with the Nigerian economy really has been how to achieve the growth, to make growth inclusive. And I think those are what the politicians you interviewed before were alluding to, in the sense that how do you make growth inclusive? Because out of about the population of about 170 million people in Nigeria, you have probably about 30 million people probably within an inclusive sector of that economy. And with that amount of people being included in that economy, the success of our economy eventually would be when we are bringing close to about 100 million people above an empowerment line. Now, McKinsey has done a study.
We're a long way off the mark.
Well, yes, we are, but you see, McKinsey has done a study, because if you say that we need at least $1,000 per person per month in the urban areas to get above that line, because 70% of the people in urban areas live below that empowerment line, and in the rural areas, that empowerment line is about $750. And you have about 80% of the people in the urban areas living below that empowerment line. The irony of this figure is the fact that if these people lived in India, you only need half of that amount to be over the empowerment line. So unfortunately...
What makes our situation the way it is? What makes the figure so high?
Well, the problems we've had is the issues of the infrastructure deficit. The cost of a lot of our products and services are impacting on our products and services. So while we have a fantastic growing economy, the challenge that we've had, and I think it's not something that has happened today, is how to make this growth inclusive and how to create a middle class. Now, with this sort of inclusion, you find that we have created a Dangote who is a $25 billion net worth individual. If you move the middle class and you put another 100 million into the middle class, Dangote could be worth easily 100 billion because you're now increasing the consumption class. So that is the way we need to start to look at our economy as to how we're empowering people and bringing people into what we call the middle class. And I think that if we can now begin to bridge that deficit gap, and so that's what we're now trying to see, who is going to articulate these policies, and a lot of the noises we're hearing, how do we distill that down to key empirical numbers to see how we can deliver. And it's quite interesting to see that the professor said that there's no ideological differences between the two options that we currently have.
He has gone into politics after he said it's
a political economy.
Okay. But Dr. Chizie, yes. I hear Telewa Adebajo. I hear him very clearly. But looking at the economy growing in spite of the drop in crude oil prices, can you please marry those two for me?
Well, I think the thing is that we have to come to terms with the fact that if you look at GDP and you take oil and you look at its contribution to GDP, oil contributes about 14% to GDP.
14?
I'm sure, yes, that's about under 20%. And so to that extent, it means that this economy is not, yes, okay, we are tied to oil in terms of revenues and incomes, streams and so on and so forth. So the foreign exchange income, you earn probably 80% of it from this source. But this economy is large. We just had a rebased economy. And then we discovered that, much to our surprise, that the service sector is about 52%. So of the GDP. And that was followed closely by agriculture. Then come oil. So when then people see oil and you look at this economy is not as, yes, okay, in terms of what you see, in terms of what would seem to matter to people, the rates of exchange and the people who are an import-dependent economy and so on and so forth. But if you look at the budget and look at what has happened, the recent crisis in the oil sector has now forced us, the oil now contributes, the oil sector contributes about 52%. If you look at the present budget, about 52%. So okay, yeah, you see oil and you see we are all nervous, because the oil price of oil is falling. Yes, we have a right, so to be. But the fact is that this economy has no reason to be there. If we take the fact of, we're talking about diversifying this economy, which is still urgent, is still pressing, and this goes back to 1986. And 1986, when we introduced a structural adjustment program, the whole point about SAP was to diversify this economy and to enthrone, market forces and so on and so forth.
And we still haven't done it.
We still have challenges. We're not been able to do it. So this economy, yes, so you see GDP, it's growing, but like he did make the point. Yes, okay, where's the growth coming from? So can you, the challenge is, can you make it more inclusive? And then also you begin to look at, the key indices of the economy. And in such to some extent, some like the rate of inflation, rate of inflation, so how do you, for instance, make sure that we still maintain single-digit rate of inflation, in spite of what is happening in the economy? But, oil is very important. Rate of exchange is very important. Central bank is fighting, because it has to balance, you have the reserves. And so using the reserves to sustain the rate of exchange. And the reserve is dwindling. And so as it's disappearing, you have a challenge, because then people are looking at that and seeing that as an indicator of how healthy the economy is.
In today's paper, we read that the dollar is now 208 naira. 208 naira to $1. And we are an import-dependent economy. So how are we going to sustain the purchase of one single dollar at 208 naira? At what rate are those goods imported with that kind of exchange rate be sold? And who's going to be able to afford it, Tilewa?
Well, the issues around the foreign exchange rate is, first of all, most of the exchange rate issues now are speculative. And
What do you mean speculative? You go to the black market and you want to buy $1, you're told to pay 208.
Yes.
So what's speculation about that?
well, that's what I'm trying to explain to you. We had a relatively stable exchange rate from the beginning of the year towards the end of the year. By the fourth quarter of the year, you can see that there's a strong correlation between the drop of the oil prices. Oil prices have dropped by about 55% since June. That's a massive. That's not even. It's not a drop. It's a.
Free fall.
It's a free fall. So it's sudden, and those adjustments have to be made. The central bank has reacted to those adjustments, and they have adjusted all their levers in terms of how they control monetary policy and try to more or less make the balance and reduce the demand. But the question we haven't answered in this country is that what is the real demand for Naira and what is really driving the drop in the foreign exchange? Yes, the fall in oil prices was a part of why the foreign exchange prices dropped. But then there is also the speculative attack on the Naira. Why? There's a lot of uncertainty as to because of the elections. People are trying to get their positions out. I mentioned to you earlier that we had, by the end of 2013, we had close to $20 billion worth of foreign portfolio investors in Nigeria in both our debt and equity markets. Those guys have started to have pulled back significantly. So at that point in time, we had a strong demand for the Naira. But right now, those guys have gone out of the Naira. Tapering has ended in the States. They're taking their positions. And also, most people are also hedging because that is why you don't heat up your policy. Once you put uncertainty into your markets, then there will be additional pressure on your foreign exchange. So that's why I say it's speculative. Once the system calms down and the elections are over and there's a clear certainty as to what the government policies and everything would be, then of course the pressure of speculation in terms of the uncertainties will reduce. And then of course the monetary policy side of things can begin to kick in, where the central bank can begin to push the levers. So right now you can see those rates will be there, but all of a sudden a massive inflow of dollars can come in next week into the system and reduce that price significantly. So if you're trading foreign exchange, it's a very good time to make money, but at the same time, if you're a novice, you lose your shirt.